You have a meeting coming up in September. It's the Talk of Jackson Hole. What's your thinking as you look forward to this September 17th policy meeting?
You know, we've had a lot of volatility in the last 10 days, and I'll be interested to see how this volatility shakes out. But right now, I don't see the main things that have happened as really changing the contours of U.S. Economic outlook or U.S. monetary policy. So a couple things have happened. Looks like long-term interest rates are somewhat lower than they would have otherwise been. That's a bullish factor for the U.S. economy. Oil prices look like they're going to be lower than they otherwise would have been. That's a bullish factor for the U.S. economy. On the negative side, you've got probably a stronger dollar. You've probably got a little bit weaker global growth. So you might take those factors, put them together and say, well, this probably doesn't change the basic picture for the U.S. economy, which is fundamentally very strong, and therefore it shouldn't change the basic picture for U.S. monetary policy. So, you know, I know there's a lot of volatility and we're going to have to see how it settles down here, but right now I'm not seeing a lot of change from a monetary policy perspective.
So what's your baseline plan for policy? How would you like to see it play out?
I like the strategy of starting to get off zero, and then that will give the committee the freedom to go and more in response to data as we're trying to normalize rates. So we'd be reserving the right to pause, and we'd have the opportunity to say that if data comes in weaker, that okay, we're not going to raise rates at this particular meeting. But by getting going, it'll give the committee more flexibility. Chair Yellen has talked about this.
Isn't the Fed contributing to this volatility by expressing uncertainty about what it's going to do in September? Don't the markets need some sense of where you stand at this point?
I'm sure markets would like to know every single rate move at every single date and hour. We can't provide that because we're trying to be responsive to the data in the economy. I think we've been fairly clear. 15 out of 17 members said that they wanted to get started on raising rates in 2015. What I'm saying here is, you know, I don't think that that's probably changed. I mean, you can ask other people, but I just don't see anything that's happened here to suggest that there's a major revision to U.S. economic outlook.
And what about the U.S. economy since the June meeting? What have you seen in the data? What have they told you about how the U.S. economy is performing?
The U.S. data has fundamentally been pretty good over the summer here, and I think if we had not had this financial market turmoil, that the probability of a rate rise would have been up during this period. We've still got another jobs report, and we've got other information. I think it was great to get the confirmation that the second quarter GDP was 3.7, which beat even the highest estimates on Wall Street as far as I understand it. So that kind of cemented the idea that the first half was pretty much trend growth, and the idea that the second half will probably be above trend growth.
Okay, thanks very much.
All right,
for your time.
Thanks a lot.
Appreciate it.